Hey guys, welcome back to a brand new video. Now in this one I am going to be going over Yieldmax in the UK, how you can purchase Yieldmax funds in Europe, not specifically just the UK but in Europe overall now, and what this means for us investors and how we can get involved and how this even works. So if you're on Money Twitter or you've been around the high yield space and you've been following some other people in the high yield space, you will know that a lot of people talk about Yieldmax MSTR. Now, this is a Yieldmax fund based on the MSTR stock, the MicroStrategy stock, and it's a covered call ETF based on that. So this is basically a covered call ETF on Bitcoin, essentially. So how this works, and by the way, this is a way of Han ETF. Han ETF have launched this in the UK, and they currently have $5.5 million under management in this fund, which is insane considering it only launched on the 9th of June, a couple of weeks ago. So how does this work? So there hasn't been a distribution yet. The announcement date is the 2nd of July and the first payments on the 15th of July. So let's read over the Han ETF website. So the Yieldmax MSTR option income seeks to provide monthly income by holding the US listed Yieldmax MSTR option income strategy, which generates this income by selling/writing call options on MSTR. MSTY employs a strategy designed to deliver attractive yields while offering investors exposure to MicroStrategy stock with a defined level of upside participation. So you've got the information here. You've got the net asset values. The NAV is $30.85. The net assets is 5.5 million. Shares outstanding 180,000. And you can see all of this information here. And you can see where they're listed and the tickers on each exchange and all that good stuff. So let's go ahead and have a look at the investment strategy. Because some people may not have an idea on how these covered call ETFs works. So let's go ahead and have a look at the basics of covered call strategy here, because a lot of people will just put money into this, seeing that it has high yield, income on Bitcoin, essentially. So let's go ahead and have a look to see what this actually does. So I'm going to read over this. If you already know about this, maybe skip along to when I talk about the fund and what I'm going to be doing with it if you're interested. But for those that don't know, this will be a good watch. So the covered call is a popular options trading strategy that aims to provide investors with enhanced income, risk management, and portfolio diversification. This conservative approach is particularly beneficial for investors looking to generate income on stocks they already own, including ones that may not pay any dividends while managing downside risk. So how covered call strategies work. A covered call position is established by an investor who owns a stock and sells a call option on that stock to generate income. The goal is to collect the option premium whilst agreeing to sell the stock at a predetermined price, which is the strike price, if exercised. This strategy works best when an investor expects the stock to stay flat or rise slightly. If the stock price stays below the strike price, the investor keeps both the premium and the stock. However, if the stock rises above the strike price, they must sell at that price, potentially capping gains. So really, these strategies work best in a sideways market. Making if the stock is staying flat and not going up crazy volatility, then that's not even a word, but you understand what I mean. It doesn't have crazy volatility. That is when this strategy works best. So here's an example. Suppose you own 100 shares of a stock currently trading at $50. You sell a call option with a strike price of $55 for a premium of $2 per share. The total premium collected is $200. Possible outcomes: stock stays below $55, the option expires worthless, and you keep the $200 premium while still holding your shares. If the stock rises above that $55, that $55 strike price, the option is exercised and you must sell your share of XYZ for $55 per share, earning a total profit of $700, which is 55 minus 50 times 100 shares plus the 200 premium. If the stock drops, losses are partially offset by the $200 premium collected. So here's how it looks graphically with a graph. As you can see, losses are limited. If the stock declines, the premium provides a small cushion and gains are capped. The maximum profit occurs at the strike price of $55, where the stock is called away. And at break even, the investor breaks even at $48. So benefits are Benefits and limitations. So covered call strategy is the ability to generate additional income by selling call options on stocks already owned. Investors receive premium payments from buyers of those options. So what are covered call ETFs? So a recent investment innovation has been the introduction of covered call exchange traded funds that execute the strategy inside of the fund. Some covered call ETFs are actively managed and provide exposure to a portfolio of stocks, while call options are sold on each stock position. This can benefit investors because managing a covered call strategy on several stocks may be too difficult, too expensive, or too time consuming. Investors in actively managed covered call ETFs can also benefit from diversified exposure to many stocks across industries or in the same industry. Selling call options on a portfolio of stocks could help to mitigate risk of any single stock or any individual covered call strategy underperforming. And then what is Yieldmax and risks? When you invest in ETFs, your capital is fully at risk and you may not get back the amount you originally invested. Exchange rates can have a positive or negative effect on returns. The value of equities and equity-related securities can be affected by daily stock and currency market movements. So, yes, you do have to be careful of FX rates, and the pound to the US dollar is moving crazy at the moment, etc. So this means that we can buy this Yieldmax strategy now in Europe. Now I'm on Trading 212, is probably the major exchanges allow it, but let's have a look to see how MicroStrategy MSTR has done over time. So if we take a look at the max time graph, you can see this launched just around a year and a half ago, February 24, at $21.60, and you can see it had a peak of around $42.99. Right now it's currently trading at $21.10, so it's basically break even. But if you've been in this since inception, you have collected an insane yield, so you would be up massively. Your NAV hasn't declined and you've gained income if you bought on day one, which of course not many people would have. So let's say if you bought in the past year, you would be down on NAV, but you would probably be in profit with the income. Okay, so let's have a look on Yieldmax's website overall. Let's zoom back out. So yeah, you can see the distribution rate, and this is on the US version, but the distribution rate is currently 93.08%. Now, of course, that is the most recent distributions contains 97.45% return on capital and 2.55%. Okay, yeah. So this distribution rate is weighted, so that is for projected with the current yield as well. If next month's yield goes down, then of course this will drop. To give you an example there. So this is the performance on how this has worked here, and I'm not going to go over all of this, but you can kind of see how this has performed over the year that it has been running. So I don't know if they've got listed here in terms of, so they currently have $4.47 billion under management, which is actually insane, to be honest. But you can go ahead and have a look at this. Now, Han ETF they've got a bunch of different funds, but really we're focused on the covered call. That's what we're interested in. So they also have another one that they launched, which is the Big Tech Income Fund, YMAG. This distribution rate is 23.97%. And if we take a look to see how well this has performed in Europe since it has launched over here, if we have a look at YMAG, we can have a look to see this. This has actually, of course, increased by 21.25%, whilst also paying a dividend. So this also may be one to have a look into if you are so inclined. So we can actually have a look. They do have a bunch of different ETFs. Yieldmax do, they have a ton. So let's have a look to see if they do have YMAG on here. So let's have a look to see what their distribution rate is. The distribution rate on YMAG in America is 58.12%. So of course a bit less. It will be interesting to see what the distribution rate is of MSTY in Europe, considering the distribution rate of YMAG is less than the one in the US. So we'll just see. It's something to keep an eye on. Saying that though, they do have a lot more funds under management, I can imagine. So they currently have, I can't see where it is right now, but I'm sure they have an insane amount more funds under management on the US version of the fund than the Europe version. Of course, yeah. So they do have 348 million versus HANA ETF has 8.4 million. So it hasn't really hit the Europe as hard. But you can see this has been performing well so far. Hopefully, MSTY can do something similar to this in terms of the growth or in terms of the performance, but we will have to see. So let me know down below if this is going to fit in your strategy, in your portfolio or not. I'll be interested to see that. And thank you for watching. Let me know what you're going to do with these. They are going to fit in my portfolio. I'm going to be adding both of these to a separate portfolio of Yieldmax funds and see how they provide. But yeah, thanks for watching. Hope you enjoyed. Subscribe if you're new, and I'll see you on the next video. Goodbye.